What's up? What's up? What's up, gang? Cosmic Training Academy, Mr. Cosmic in the building. And today is September the 6th. And actually, is it the 5th? I think it's the 5th. Fifth in the States. As you can see right here, like I said, showing some trade. Just got in the market. QQQ, Invesco. Check that out. Um, so as you can see, my prediction is that Invesco is probably going to try to touch the 80 mark right up here in return. Okay, it's probably going to go back up there, at least bump off of it. That's my prediction. This is the 1 day. As you can see that 1 day. That's where we at right now. This is where I think we're going to bounce off of. Once I see it getting close to 380, I'm gone. Doesn't matter how much money it is. It's just that's where I see it going. I'll probably sell half of the contracts, or maybe I'll sell all of them except for one, and just see where the other one might go. This is a call debit spread. So if you don't know what a call debit spread is, it is when I go into a position where I buy an option on one end of the position and I sell an option on the other. Okay, but the reason why it's a debit is because I bought a call option. The reason is because I bought a call option, as you can see right here. That's 5 call options that I bought, and then I sold. Oh, sorry about that. And then I sold the exact same amount, 5 call options. So that's where I got a credit. Anytime you sell, just remember, selling means you're going to get some money up front. Buying means you got to pay up front. So in other words, if you're buying from somebody. If you're selling to someone, right? Obviously, that's capitalism. And so, in this case, I got 5 contracts on each one, because you got to have the same on each one. That's how you balance out a spread. If you mess around and do too few, or you do 5 buys and 4 sales, or 4 sales and see what I mean? You cannot do it uneven, otherwise your spread won't be locked and it won't be protected on one end. So the object of the game with a spread is to protect your trade on one end, and thereby getting in position for less price. Generally, if I just did calls, this by itself would have cost me 900 times 5. And 900 times 5, as you can see, sorry about that, but that's 900 times 5. That's how much this trade cost me on the buy side. See? But because I turned around and I sold the 381, the reason why I sold 381, because it's past the money of where I think it's going to go to. So I sold it far out of the money. As you can see, 378 to 381. Okay? So I'm going to be out before 381. That's my intention, unless it shoots up past 381 really fast. But I'm going to be out before 381. That's why I put my sell at 381, because I want to be gone before then. Okay? And I'm also going to be gone if I lose $100. I got $1,000 on the table, just about. So if I lose $1,000, lose $100, that's 10% of what I'm waging. That's enough. I usually take my wins at about 20% win, 10% losses. That's a good way. You know what I mean? So if you think of it like that, then, but you got to make sure that your price is exactly the same. You can't scale that concept of 10% wins, 20%, 10% losses, 20% wins, You cannot scale that off of just a percentage alone. Remember, because if you take a different price on each trade, then that don't even out. So the only time that you can use that scale to cross across all of your trades is if all your trades are exact same price. Understand that this. I want y'all to understand that because that's one of the most difficult concepts for me to understand as a trader. You cannot use a scale of percentages for take profits unless it's to use that as a scale of how much you making and how much you're losing, unless in fact you're doing the trades for the exact same amount every time. I mean, that's the only way. But if you're trading $1,000 on this day, $200 on the next day, you win on the 200, but you lose on the 1,000, you're still a loser. You understand? So if that's your strategy, you need to make sure that if you're trading $1,000 today, you need to trade $1,000 tomorrow and every day after that. And that's how you know if your strategy actually working. But you can't understand if your strategy working if you trade 500 today. And that if you do that, it's just So So anyway, so we're at 378.58. We're looking for a climb. When I get to about 379, close to 380, I'm walking, man. If it gets that high. If it gets that high. Keep in mind. See, why do I think that? Look at QQQ. So, it's not hard to see. It needs to touch. Trading isn't really that hard. It's just understanding what to look for. If it breaks this bottom, we out. If it breaks the bottom down here, we gone. Once it touches the top here, I'm gone. I might leave one to see if it'll run, but at the moment it pulled back, I'm gone. You know what I'm saying? So that's the strat. That's how you trade. That's how I trade anyway. It's up to you to decide how you want to approach it, but it's really about understanding the fundamentals and the basics. So you can see a pullback right here, 378. Every time that thing clicking, we losing money. 346 cents. So, and now people are going to start getting a little nervous, so they're going to start pulling out. And then once they pull out, it's going to shoot up. That's my prediction, anyway. You never know what the market's going to do. As you can see, it didn't make a higher high. So a lot of people are going to get scared. It backed off that last high. It's going to make a lot of people jump ship. I'm not going to jump ship unless it goes at least halfway. It's got to get probably somewhere around there before I jump ship. I might even, depending on the price, depending on where that price is right there. I might not. Because really I know that this is where it could bounce off of. So wherever that's at, and that's a good thing to look at. Is just look at where that's at. 377, 377.50. See, so we're $1 away from where I would bail. We're $1 away from where I would bail. So I'm not really nervous just yet. Let's see what we're doing on profit. $10 down. 15, 20. Almost time to go. If it gets to close to 100, I'm gonna really start thinking about it. If it get to 50, I'm gonna start setting up my trade to get ready to go. What's cool about this is the numbers. The value on this contract was $1,000. So it's almost pretty much even. So as you can see, as the number moves from 985, you know that's $15 off 1,000. So depending on how much money I want to make off this trade, if I want to make $100 off of it, all I'm looking for is to go to 1,100 on the value. And that's it, I'm going. So once I see it start getting close to 1,100, or I see it start reaching its high, which is where I said I'm looking for it to reach 380. Once you get 380, I'm putting in a trade. I'm gone. 9 of those, well not 9, but 8 of those will be gone. The reason why it's 8 is because remember, 1 is a call, 1 is a sell. So 8 of them are going to be sold. Okay? So just keeping an eye on it. And again, like, that's what we're here doing. I'm just basically showing you what we do. It's a master class on simple trading. What better than the QQQ or the SPY? What better than early in the week after a holiday, Labor Day? What better than looking at a chart that's doing this? We know that's an upward. What better than when we got a high and we got a low? What better is we right in the middle? What's better than that? We know, this is a master class on trading right here. This is exactly what you want to see in the market. You already have a place where you know where it needs to pull down to. You already know where you want to stop it at. You already know where you want to stop it at on profit. Simple. This is not that hard, guys. It's just about, don't complicate your trades. I got other stuff like 50 moving average, 20 moving average that lets me know to get in position, look for a position, check it out, pay attention, bring up. But other than that, it don't make me necessarily get in position. Indicators are there to help you know what's been already transpired. I said this before, I'll say it again. You don't base your trading off indicators only. You got to look at the past activity. You should know whatever asset that you're trading, you need to know it front and back. You don't need to be playing around with stuff you don't know. And stop trading any and everything. Anybody who wants to be a master trader, you need to know one thing or two things or three things very well. If you trade Apple every day. If you trade AT&T, trade AT&T every day. You be seeing the other stuff thinking you're missing out on money. Forget about the FOMO. Forget about it. Because all the people that make that quick money lose it just as fast. Do not base your life off of that. And do not base your trading knowledge and your skill off of that either. Be smart enough to pay attention to one asset, and preferably an asset that is giving you dividends if you end up having to own it. Okay? Preferably an asset that you actually like. Preferably an asset that has good volatility. Preferably an asset that has a lot of trade volume. These are things that we're looking for all the time. If you don't have trade volume, then why are you trading it? Look at that, 19 million, that's trade volume. Do you understand what I'm saying? Average volume is 50 million. See, when you're looking at, you shouldn't be trading anything under 500,000. You shouldn't be even looking at it, because the problem is getting orders filled, getting in and out of orders. You don't want to be stuck with stuff. You need your trade to go through quick. You need to go through fast. How else will you get that? Volume. That's how you get that. Okay? And, if you can get something with dividends, even better. Because if you got to sit on something, at least get something for it. Right? Right. So, pay attention. I'm not going to hold you guys like I did on one of the last videos. I think I held you for probably 30 or 40 minutes just waiting on the trade to materialize. But I just want to step in today, show you what a call debit spread is. It's a debit because it cost me more than I got back. It's a spread because I have buys and I have sales. 900 I bought, 700 I sold. You know, so that's that. So guys, just check a look at that, and just enjoy yourself and take your time and keep getting better and better and better. Mr. Cosmic, Cosmic Training Academy, train, travel, and trade. Right now, we in Asia doing what we do. You know, email me if you got any questions. Check us out on TikTok, Instagram, Facebook, whatever. You know, Weebly, if you want to purchase anything, we're on the Weebly. Um, so we have the class. If you want to join the club, where we give you monthly returns, and we have everybody has to put in the exact same amount. I think right now that we're there. We want to do it for $1,000 every member. So $1,000 every member. And the maximum is 99 members. We're gonna do a $100,000 fund, and only $1,000 minimum, $1,000 maximum, $1,000. The reason why we're keeping it exactly the same across the board is for accounting purposes, and so that way we can always make sure that everybody gets the exact same number back in return. Real neat, real orderly, real simple. Cosmic Training Academy. Join the club if you're interested. You can also deposit through PayPal. You know, so we have that on there, Cosmic Training Academy on PayPal and everything like that. So, and you will see on here what the account is every. I think we do it every week, or basically we'll be trading through the account, and you'll be able to see the trades. You'll be able to see the total amount that's being made, and for that matter, when you see the profits made for the week, you'll also be able to see what's going to be divided by all the members. So question is that what you want to do? Come join us. We'll see you on the other side. Thanks for watching the video, guys. Like and subscribe. I'm out of here.